Our next guest says the valuation is nice, but Foresquare should consider the buyout offers that it's had from the likes of Yahoo and Facebook. Venture capitalist Bob Rice is a member of New York Angels and a managing partner at Tangent Capital. He's joining us now in the newsroom. Bob, always good to see you. Thanks for coming in again.
Thank you.
Foursquare is a social location site. For anybody who doesn't know, Bob, just describe it. I mean, basically, users can check in, they can tell their friends where they are from a variety of locations.
Right. It's a little bit like Yelp, which is a recommendation engine for what to do when you're in the city, and Twitter, so you can connect with your friends and have fun with them. There's a little bit of a game playing element later on top of it.
And the demographic, I imagine, is skewing pretty young.
A lot younger than I am, yes.
All right, Bob, we'll leave it there. Well, now you say that despite the demographic aimed at the youth, that the founders are actually nuts, right? I mean, they've had buyout offers from Facebook. It seems like Yahoo was very interested, but the company seems to want to go it alone. Is that right?
Apparently, they passed on an offer from Yahoo, which sources had at $100 million or more, and they're taking venture capital money that's valuing the company at about $80 million. But these numbers really are crazy. It's hard for people to really, this is like .com redo.
I was just going to say, it shows that VC money maybe is getting a little frothy.
Well, it's absolutely proving, frankly, there's a crisis in the VC community because they're all built to invest very large chunks of money. And the new companies that are coming up right now, which are really about connecting things which already exist instead of creating new things, simply don't need that quantity of money to get going anymore. So if you're Mark Andreessen and you're sitting on a brand new $300 million fund, you're looking, you've got to find a place to spend this money. And so the VCs are competing with each other to get into the very few deals which can justify significant investment, and that's driving the valuations absolutely through the roof.
It does sound like .com all over again. But what's to keep a Facebook from building its own Foursquare?
Absolutely nothing, which is why I think the founders should take the money and run, frankly. There's nothing that special about this particular service other than they've got a very enthusiastic user base. But the user base is only 1 million people. And when you look at the valuations here again, they're being valued at something like $80 to $100 per user, where Twitter is only worth $20 per user and Facebook $30. So
do you think Andreessen is purposefully taking advantage of the VC froth?
No, a lot of it is his money. I think he's in a box, and I think he feels like what I hear from my friends is that he needs to be in the few deals that can be billion-dollar companies. So he feels forced that he has to be in here, and he and everyone else in the VC industry knows this valuation is out of control.
All right, so you question obviously the judgment of the team there heading up Foursquare, but you also question what's going on in VC activity, that it's frothy. It's also showing it's alive and kicking here in New York, does it not?
Well, that's the great news for New York City. Absolutely. New York is becoming a really important hub of technology development, and because as the industry moves more towards connecting people, advertising, and media, that's what New York is great at.
Bob Rice, thanks. Always glad to see you. Angel investor and managing partner at Tangent Capital, speaking us there with the fate of Foursquare.